Okay, so you know how everyone's kind of freaking out just a little bit about the stock market lately? With the S&P 500 and the Nasdaq dipping like that, it's like you can almost feel that tension in the air,
Yeah,
right?
for sure. It's like you check your portfolio and suddenly it's not looking quite as rosy. And then you see the headlines talk about corrections and it's easy to get a little bit spooked.
Right. And then everyone's pointing fingers at these tariffs, blaming the Trump administration's trade policies. So we're going to try to actually understand what's going on. Welcome to the deep dive, by the way, where we dig into the stuff that really matters.
That's what we're here for, right? Cutting through the noise and figuring out what it all means, especially for your own investments.
Exactly. And today we've got this super insightful analysis from the Motley Fool. They dove into Warren Buffett's take on the whole tariff thing. And, well, Buffett's kind of a big deal, right?
Oh, absolutely. If Buffett's talking, investors listen. The guy's the legend.
So basically what we're going to do today is unpack all this market craziness, try to wrap our heads around what's really driving these reactions to tariffs, and most importantly, figure out how all this might impact you as an investor. Sound good?
Let's do it.
Perfect. Okay, so first things first, we got to talk about this market downturn. I mean, it's been pretty hard to miss those headlines, right? The numbers are kind of, well, not great.
Yeah, no sugarcoating it. The S&P 500 and the Nasdaq Composite, both in correction territory, which, just as a reminder, means they're down 10% from their recent highs. And when both of those major indexes drop like that, it's definitely a signal that something's up.
And a lot of the chatter seems to point the finger squarely at the Trump administration's, well, let's call them assertive trade policies and all those tariffs.
Yeah, assertive is one way to put it. And look, the thing about these tariffs is they're not just some abstract political football. They have real economic consequences. The Motley Fool article cites the Tax Foundation, and they estimate that these tariffs could end up pushing the average tax rate on imports to something like 8.4%, which is crazy high. We haven't seen numbers like that since, get this, 1946.
1946. Seriously. That puts things in perspective. And I guess the worry isn't just about the U.S. slapping on tariffs, right? It's like, what if everyone else starts doing the same thing?
Exactly. It's like a trade war waiting to happen. If other countries retaliate with their own tariffs on American goods, things could spiral pretty quickly. Imagine you're a company trying to sell your products overseas, and suddenly your costs are way higher because of these retaliatory tariffs. It could really hurt American businesses that rely on exports.
Yeah, it's like a domino effect. And it sounds like this whole trade war thing is spooking some of the big financial players too, right? Like enough to actually change their predictions about the economy.
Oh yeah, the Motley Fool article mentions that economists at both JPMorgan Chase and Goldman Sachs have actually upped their estimates for the likelihood of a recession. And when those guys start talking recession, people pay attention.
For sure. And then you've got President Trump himself not exactly calming things down, right? The article pointed out how he basically didn't deny that a downturn could be on the horizon.
Well, yeah, that lack of a clear denial, it kind of just adds to the uncertainty, right?
Yeah.
When even the president doesn't seem totally confident in the economy, it's understandable that investors might get a little jittery.
Totally. And one of the things the Motley Fool piece talks about is this rotation away from U.S. stocks. What exactly does that mean? Like, are people just pulling their money out of the U.S. market altogether?
So rotation basically means investors are shifting their money out of one type of investment and into another. In this case, it seems like they're moving away from U.S. stocks, particularly in sectors like technology and consumer discretionary. Those are the ones that are usually hit hardest when people worry about the economy slowing down, less spending, less growth. So investors might be shifting towards sectors that are considered a little more stable in uncertain times, or even looking at international markets that aren't as tangled up in this tariff mess.
Okay, so we've got this pretty significant market downturn, largely fueled by anxieties about these tariffs and their potential to really mess with the economy. Now, let's bring Warren Buffett into the conversation. He's like the Oracle of Omaha when it comes to investing, so his take on all this is super valuable. So what's his stance on tariffs?
Well, the Motley Fool piece is interesting because it says Buffett didn't really comment directly on the current administration's specific policies, but he did make some pretty strong statements about tariffs in general. He basically called them an economic act of war, which is, well, pretty intense.
Act of war. Wow, that's a powerful way to put it. I guess he's not exactly a fan of tariffs then.
It doesn't sound like it, no. And the thing is, he doesn't just stop at the dramatic pronouncements. He lays out the economic logic, too. He's really clear that in the long run, tariffs act as a tax on goods. And we all know what taxes mean, right? Higher prices.
Yeah, and the Motley Fool is quick to point out that ultimately it's us, the consumers, who end up paying those higher prices, right?
Right. Businesses facing those higher import costs because of tariffs, they have to pass those costs along somehow, and that means raising prices on the goods and services we buy. Which leads to, you guessed it, inflation.
So tariffs could actually make inflation even worse. And it sounds like this whole thing could have a pretty big impact on the overall economy, too. Didn't the article mention something about a specific economic forecast?
Yeah, it highlighted this forecasting model from the Atlanta Fed that actually predicts a potential 2.4% drop in GDP for the first quarter. That would be the first time the economy has shrunk in over 4 years. And they're suggesting it could be linked to these tariff-related economic stresses. It's kind of a scary thought, to be honest.
It is, yeah. But here's the thing, and the Motley Fool emphasizes this too, even with all these concerns about tariffs, Buffett is still super optimistic about one really fundamental thing.
Yeah, that's what's so fascinating about Buffett. He can be really critical of specific policies like tariffs, but he remains fundamentally bullish on American business. He said, and I quote, "A majority of any money I manage will always be in the United States." That's not just talk. That's him putting his money where his mouth is. He believes in the long-term strength and innovative power of American companies.
And that's really interesting, especially when you look at what's been happening in other markets around the world. Didn't the article mention something about that?
Yeah, it pointed out how major stock indexes in Europe and Asia have actually been doing really well this year, while the U.S. market, with the S&P 500, is down. That kind of highlights Buffett's commitment to the U.S., even when things look a bit shaky.
Makes you think of that classic Buffett line, the one the Motley Fool brought up. Never bet against America.
Exactly. The Motley Fool argues that this advice is more relevant now than ever, even with all this market uncertainty. And when you look at the big picture, globally, it's hard to argue with his optimism. 17 of the top 20 largest companies in the world based on market value are American. That's a pretty clear sign of the strength and dominance of the U.S. economy.
So even though we're dealing with these tariff-induced jitters, Buffett's message seems to be, don't underestimate the long-term potential of American business. Now, the Motley Fool also dives into how seasoned investors tend to view market corrections like the one we're experiencing.
Yeah, and this is where you really see Buffett's contrarian approach shine. He's got this famous quote, which the Motley Fool pulled from his 2013 shareholder letter, where he says, "A climate of fear is your friend when investing. A euphoric world is your enemy." He's basically saying that when everyone else is panicking and selling, that's when the smart investors see opportunities. It's like when prices drop because of fear, you can scoop up quality assets at a discount.
So is he saying that this current downturn, all fueled by worries about tariffs, could actually be a good thing for investors who are willing to be patient and play the long game?
That seems to be the takeaway, yeah. The Motley Fool highlights that historically, both the S&P 500 and the NASDAQ have always bounced back from every single market correction. So if history's any guide, this downturn might end up being a chance to buy into strong companies at a price you wouldn't have seen a few months ago.
So it's like opportunity knocks for those with a bit of courage and a long-term perspective. But of course, the Motley Fool also acknowledges that things could get worse before they get better, right? Especially if this whole trade war thing escalates.
Right, they're not pretending to have a crystal ball. They say that further market declines are definitely possible if the trade situation deteriorates. But they also emphasize that based on historical data, even if that happens, the market is very likely to recover eventually. It's just a matter of time.
So what they're saying is don't try to be a hero and time the market perfectly. Just ride it out.
Exactly. Don't try to catch the falling knife, as they say. The Motley Fool even quotes Buffett from back in 2008 when things were pretty rough. He said, "I can't predict the short-term movements of the stock market. What is likely, however, is that the market will move higher, perhaps substantially so, well before either sentiment or the economy turns up." So trying to perfectly time those swings, it's basically gambling, and the odds aren't in your favor.
Right. It's like by the time the news starts sounding all positive and everyone's feeling good again, you've probably already missed the boat. It's a much smarter strategy to just stick to your long-term plan and not get too caught up in the day-to-day swings.
Agreed. And that brings us to the final point the Motley Fool really emphasizes: the importance of making rational decisions, not emotional ones, especially during times like these when things are volatile. They quote Buffett again, this time from 2017, and he talks about how scary headlines and breathless commentary can really mess with your head and make you do dumb things with your money.
It's so true. It's easy to get swept up in all the negativity and make impulsive decisions that you later regret.
That's why it's so important to have a plan and stick to it. Remind yourself of your long-term goals. Understand that market corrections are a normal part of the cycle, and don't let fear take over.
So as we wrap up this deep dive, what would you say is the key takeaway for our listener, given all this talk about tariffs, market downturns, and Warren Buffett's timeless wisdom?
The big takeaway is, while the current situation might feel a little uncertain, history tells us that the U.S. stock market is incredibly resilient. Both the S&P 500 and the NASDAQ have always recovered from their losses eventually. So if you're in it for the long haul, investing in the stock market today can still be a good move. Just remember, stay calm, stay rational, and focus on those long-term goals.
Absolutely. So just to recap, tariffs are definitely stirring up some trouble in the market. But a seasoned pro like Warren Buffett sees potential opportunity amidst the fear. He reminds us that American businesses are fundamentally strong and that historically markets always recover.
And for you, dear listener, the best advice is think long-term, don't panic, and consider this a chance to maybe find some great companies at a discount.
And on that note, here's a final thought to leave you with. Think about what Warren Buffett said about betting on America and the strength of American business. What are some quality American companies that you think will not only survive these current challenges, but actually thrive in the years to come? Food for thought as you navigate this ever-changing market. Thanks for joining us on The Deep Dive.
See you next time.